Today is Tuesday, February 21st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests. It should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan. Tomorrow, the Fed will release the minutes from the Fed's February 1st meeting. What will this reveal about Fed policy?
So most likely the minutes will be hawkish on balance. Of course, at that meeting, that was when the Fed did hike rates by 25 basis points. And this, I think, paves the way for another rate hike at the March 22nd meeting. So on balance, look for a fairly hawkish set of minutes. And I think in advance of that, stock index futures will probably have some trouble. But after the minutes are released, I think then we can probably see some recovery in stock index futures.
And we have a short week this week with yesterday being a holiday. What major economic reports this week could have a major price moving impact?
Okay, of course, the main event will be the minutes tomorrow. But other than that, on Friday, we'll have personal income. That's expected to be up 1%. Personal consumption expenditures up 1.2%. But probably the most important of those three is the PCE price index, personal consumption expenditures price index, guessed at 4.9%. And that would actually be down from the previous month. And then we'll have consumer sentiment on Friday, and that's estimated to be 66.4.
Lastly, Alan, will the recent gains in the U.S. dollar index follow through to the upside? Seeing some gains.
I don't think so. I don't think they'll continue to follow through. And the reason is that even though the Fed is probably going to raise one or more times, right now there's more talk that there could be another 25 basis point hike in May. But other central banks are also going to raise at probably the same pace, and that would include the ECB and the Bank of England. So interest rate differentials, I think, are really not that advantageous for any of the currencies. So I would expect not much follow through to the upside. In fact, maybe some of these recent gains may be given back.
Thank you. Mark, turning toward the grain markets, we're still a couple of months away from planting here in the U.S., so we're focusing on the growth on the growth in South America. What's the weather outlook for South America this week?
This week is expected to be dry across much of Argentina. Light rains may fall over some of the western and northern corn regions. However, key areas in the central and southern parts of the country are forecast to remain dry all week. Temperatures this past weekend actually dipped below freezing in some areas, likely causing some minor frost damage. So far, the extent of this damage is not known, however, something that will be monitored throughout the week. All in all, it's been a very tough year for the Argentine farmer as drought and now frost continue to chip away at crop prospects. In Brazil, pretty good weekend rains late last week over the weekend across the northern and central regions of the country. Will slow down harvest operations for soybeans and in turn corn plantings the first half of this week. However, looking forward, rainfall the rest of the week and into the weekend are a little bit more scattered, resulting in more of a normal to below normal rainfall forecast. So that should enable harvest operations to resume at an accelerated pace.
Mark, given this South American weather situation, what's your price outlook for soybeans now?
Well, I've been thinking prices would roll over back below the $15 level for some time as global demand shifts away from the U.S. into Brazilian supplies. However, given the continued weather challenges in Argentina, soybean prices remain stubbornly high. That despite slowdowns in both domestic crush and exports here in the U.S. Production estimates for both corn and soybeans in Argentina continue to slip, causing the supply uncertainty, and has led to a gap higher here this morning in our overnight trade. The key resistance right now for the spot March contract rests at last week's high at 15.55.5. A level I would not be surprised we shoot for at some point this week. However, I would be surprised if we make it clear up to the contract highs of 15.72 last summer. So I still expect prices to roll over. Downside target for spot beans between now and the end of March, 14.75.
Mark, lastly, same question for the corn market. What's your price outlook in the corn?
Well, spot corn prices remain in a very narrow sideways trading pattern. I've been suggesting a 650 to 690 range. It's actually been more like the narrower than that, the 670 to 690. I really don't expect that to change until we know a little bit more about Brazil's second corn crop, which right now is about 40, nearly 50% planted, which is slightly behind the normal pace. And how many acres we're going to plant here in the U.S. this summer, or this spring. We do have a big report, a March 31st planting intentions report, obviously at the end of next month. So gearing up for that. Right now, I think the market's looking for about 90 to 91 million acres. That's up 1.5 to 2.5 million.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.